Hello traders everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub. Just back from vacation with your midday update for Monday, the 7th of January. Well, let me start by wishing every one of you a happy and prosperous 2013. I hope you all enjoyed your break with your families and celebrated the special time of year that we call Christmas time here at our company. So let's get started looking at the markets. First of all, it's 2013. We're still in the early part of silly season, which means the markets can do anything. Like we just saw the market run up dramatically last week, up over 300 points in one day. And that's all because of what we call silly season. Not a lot of volume, not a lot of activity. So let's go right to our portfolio. We're going to be looking at a couple of markets. In particular, we're going to be looking at the Amazon and Apple and also the crude oil. Very interesting market there. I want to share that with you. So let's just go right to the first market, and we'll go to a daily chart. And you can see the daily chart basically, let's scope this out a little further so we get 6 months activity, maybe a year. Let's go 2 years. So we're back up to this area of resistance. Now you can see previously back in September we've got up to this over the 1450 level on the S&P 500. And it proved to be a real challenge because we hit that level basically 3 times. You can see we tried to get through here, here, and here, and all failed. And now we're back up here. I suspect that we're going to see some more work like this and then probably see a pullback. It would be very unusual for this market just to keep going up from this level. Very, very unusual, and I don't think we're going to see that happen. So let's just clear the screen and say we're sort of in a trending range. We're going to 60 here. So I think we're still in a trending range, and I think we want to watch that market and in it next week. So let's go to the next market. That's the Dow. And while that's coming up, you can see that hasn't fared quite as well as the S&P. It's still not above the highs that we're seeing in September around the 1360 level. And I think that's going to be where we'll see this market sort of fail. But let's give it some more time. It had the big day. If we get close in to this market, you'll see. Had the big day last week on the 2nd, January 2nd. Of course, boom, because of the fiscal cliff. And of course, it really hasn't gone too far, and we're starting to wane a little bit here. So also you've got a slight bearish divergence on the market as well. So let's look at the NASDAQ. And it's going to be back, and it's going to be good to be looking at the markets and seeing what's going on here. And let's just get some data here. So again, only the S&P 500 is really close to its September highs. These markets haven't really got there yet. It's going to determine some activity before we get through silly season and we get back to normal, whatever normal is anymore, markets. And I think that's what we need to do. Right now, I would say the best thing to be is on the sidelines, which is a plus 60. And the longer term trend determined by our monthly trade triangles is still negative. So that's the thing you want to look at. So let's go back to our crude oil market. I want to take a look at crude oil because I think this is really interesting. I'm going to look at a line chart, and this is what I saw on this line chart earlier. I'm going to put some trend lines in. You remember how to do that. It's just very simply click here. It's add or edit trend lines. It puts a little box right here on the left-hand side, and then you know this tool is live. So you click here, scope it down, and then click here, and we go up. Now we can scope this in a little further, and the trend lines stay attached. You see that? So let's go. Perfect setup in my mind, and I want to share with you why I'm saying that. Well, first of all, if you remember, we like markets to hit at least 3 times for a trend line to be valid. Now we've had the 3 times and they've been spaced out, which is great. Now we're back up to this area right now, right up against that trend line. And we've also have the 3 on the bottom. So this market is really contracting. It may come down again, but it's really contracting and ready to do something big. It'll be either on the upside or the downside. Now I know that sounds kind of nebulous, but the reality is you've got your weekly contrast. The monthly's still down, the weekly's up, and the daily's up. Now with our trading on oil, we use the weekly for trend, and we use the daily for timing. Okay, so we've got the daily trend and the weekly trend up, so you should be long this market. if you're trading. And you can see the numbers from 90 and 93.30. It's 93.12 last, so it's right pretty much where it is right now. But the real number to me is going to be when you see this monthly go green and we break and close over this trend line. If we do that, then I think we'll see it shot up to the, I think we'll definitely see the market go over 100, which would be the first stop, which is right here, which is this previous high. So that's where we'd say resistance is going to be. And that's going to be right around the $100 level. And this is close attention to this line. I think we'll probably see this market pull back a little bit and then maybe take an attempt to take it over that line. But we are overbought. You can see from the Williams percent R right here. So we are overbought. So we may trail around a little bit before, more of a two-way market before we get this thing rocking and rolling one way or the other. So let's just clear that screen. And the next market we're going to be looking at is the euro. Now it's interesting, the euro hasn't done a whole heck of a lot in terms of when I left. It's 131.08 right now. Let's just get this, close this in a little bit further. Maybe a 6-month chart. Yeah, 131.14, pretty much where I left. I left right around, in fact, I'll tell you, when I left it was 132.20. So it's down about one full handle, but not a big deal. Pretty much flat. It still is in an uptrend. You've got the weekly and the monthly in a positive. Only the daily is in a downtrend. And with this, you really want to use both the tools that we have here. So let's just put a candlestick chart on, and you can see today's action is pretty positive. It seems to be that the euro is once again reasserting itself from an oversold condition. And you can see basically you have a little bit of a divergence right here, but not a big one. So I think we could see this market go back up to the 132 level without too much of a trouble. But generally speaking, the trend is your friend, and we are seeing the trend is pretty much positive for the euro, much what it was like when I left. So moving on to gold. Gold has not fared as well. In fact, it's down today. $5 an ounce. And if you just put a close only chart, you can see this basically the level right here, which is the 1640 level, as a key level. To close under that, then I think we'll see some further downside pressure. So if we scope this out further, we can get an idea of where this market has come from. And I think we're probably, let's just put a Fibonacci in there. Remember how to do that? You click here, it changes the box to the left to a Fibonacci retracement. You click on the top, highest point, scope it down to the lowest point, and there we have it. So right around the 1640, 1634 level is a 61.8% retracement. If you remember, that's the retracement we like to see. That's a very good retracement to have in a market. And if we put, let's just try our, so if we do that and we scope this down to here, so looking on the close only, we're looking at a high-low last on a candlestick chart, and you've actually seen it go down to 1629, which is a 61.8% retracement. So for the most part, you could say this market's retracing. So what we may want to be looking at now is to see some more action down here and then some sort of recovery from those levels. But right now, everything is negative. So the trend is down, and that's the line of least resistance at the moment for this market. So let's just clear the screen and go to our next market. Hey, it's good to be back, and it's good to be talking about the markets and looking at the markets. So it's kind of fun to see what's happened, and obviously a lot hasn't happened, but generally speaking, you can see this is where I left the 20th, 29.72, and we're 30. So nothing's happened in silver. Well, I didn't miss a thing, and but it is beginning to resolve itself. And again, I think you probably have a Fibonacci retracement level there again. So let's just pull that down to the lows. And yeah, you're right around 60. So right around the 29.64 level, 30 level, that's a 61.8% retracement. Usually is where the market's going to find some support. That's exactly what has happened so far. But we need to see more volume. We need to see more players come in, and that's going to happen next week. So let's very simple. Click on here. and that's copper. Now, copper obviously is a beneficiary of a good economic times, conditions, and you can see we had a big move up here based on the fiscal cliff potential. But nonetheless, the trend is your friend, and the trend continues to be positive both on the longer term and the intermediate term weekly trends. So they're both positive on that. So let's go to our next market. We're going to be looking at Amazon. And Amazon just scored really big today, and let's just put that there. And that's today, signal at $263.11. It's $265. Now that signal came out today based on a monthly trade triangle. And what I like about this stock and what I like about the way this market's setting up is this. So I'm going to draw a trend line, very simple trend line, just to close over there. You've got 3 points here. You're going to close over this level. So we can measure from this point here, 220, up to 260. So we subtract 220 from 260. I'm going to do the math. 60. Oh, hold on. So we say 260 minus 220. That gives you 40. We're going to take the same 40 number here, add it to 260, so we plus it, and that takes you to 300, which is a nice round number, isn't it? So I would expect that Amazon, the target zone, is going to be 300. Now, we need to close over, obviously, this trend line. So that's going to be a big thing. If we close up to these levels around the 265 level, 264.50, I think we're going to be in great shape. But generally speaking, I love this stock. Love the formation. Love the way it's setting up. So let's close that up. And let's go to our next market. And the next market we're looking at is going to be Apple. Yes, that wonderful stock called Apple. And I must say I love this product. These here, but really what's happening? It's not acting that well. Here is 522. If you look at these lowest closes we've seen, this is a 513, 509, 515. So we're not that far from the lows, but maybe what we're doing with Apple right now is maybe we're just beginning to find some sort of support from here. Now, if we take this, clear the screen off again. So I don't like this stock as much as I like Amazon, obviously, because the triangles are mixed. You can see the weekly is up right here. The monthly is down, and the daily is down. So you've got the 65, which means right now you're in a trading range, but the emphasis must be placed on the trend, the big trend, which is the monthly for stocks, and that's negative. So let's just clear that screen off. And let's just scope this out just a little bit further and see what we have here. So let's go to 1 year. Let's go to 2 years. So here we are. If we put our Fibonacci in here, and we go from the very tallest point here, pull it. So it'll be a big recent low. So right around this level, the 500 level, between 532 and 492. That's $40 if you just basically divide that by 2. So let me just do the math for you again. And here we are. So we say the difference between this level here and this level here is $40. You can see that from, let's say, 492 to 532, $40. So we divide that by 2. So it's 40 divided by 2. Gives you 20. We're going to add 20 to the low right here. So that will give you somewhere in the region around the 12 level, 512, which is average between these 2 points right here. Okay, so 512, we've certainly seen the market close there around the 509, 510 level. So we may have seen the worst for Apple, but the competition in this market, in tablets, in iPhones, smartphones, whatever you want to call them, is ferocious, and Apple's going to be very hard pressed without Steve Jobs to keep its edge in the marketplace. The big thing, of course, what everyone's rumored about is the Apple Let's just draw an apple like that. TV. Is that going to happen? That's something we don't know about. We'll have to see how that plays out. But we'll look at this tomorrow. I'm Adam Hewison for Market Club. Great to be back. Great to be hearing you and talking to you again. And we'll be back at the same time, same place tomorrow. So stay tuned for that.